A very good afternoon to everyone. So today we are going to discuss the chapter 18 about the audit of acquisition and payment cycle. So talking about the acquisition, sometimes some chapters or some textbook, they will call it purchasing cycle. So it is the somehow the opposite or the other side of the business of the revenue cycle. Revenue cycle will deal with customer, whereby the acquisition cycle normally will deal with suppliers. So in there we will collect payment or cash from customers, whereby here we will pay, we will disperse, we will pay to the suppliers. So there we have account receivable, here we have account payable. Okay, just to have a clear understand about this. So let's start with what is the main activities. In simple way, it is about acquisition of goods and services, purchasing goods and services, and payment or cash disbursement. Okay, so we can spell out this two activities: to acquisition of goods and services, cash disbursement, and purchase return and allowance and purchase discount. So if we have discount and so on, or purchase returns, so we will return it to the suppliers. And then we can also break it to more details. So requisition of goods and services. So this one, now we are requesting in order process in procurement. We are, so let's say we have internal form, we collect what is the request of goods and services in terms of raw materials, in terms of stationaries and so on. And then we prepare in the second activities, prepare the purchase order. So and then after we prepare the purchase order, we send the purchase order to the suppliers, and then we receive the goods and we inspect those goods and store it in the inventory. After that, we need to prepare the payment vouchers, and we should record. So this one is more details about the account payable and requisition. So we start with issue purchase order. Starting from here, issuing purchase order. Sorry, I supposed to use the pen. So we start purchase order. Then when we receive the goods, we need to inspect the goods here, and then we need to enter the invoice that we receive from the suppliers into our account. So we in this stage, sorry, enter the invoice. We are recognize the liabilities that we should pay to the suppliers, and then we do matching the invoice for recording. For this record, we need to match the purchase order with the invoice details that we match it, and then we prepare the receipt match. Then we start to release the payment to so normally we start to send, we ask the internal auditor or the management to approve the disbursement of cash, and then we make the actual payment. And then later on, when we settle the payment, if we settle it with check, then we need to cancel the bank statement and balances with the we reconcile it with the release payment. Okay, so this is the account T account for the related account for the acquisition and payment cycle. So we have before that we have the if we have cash transaction. So in cash transaction, then we will have this account, the cash in bank, with the raw materials direct, or the equipment if we buying equipment or property or plant. So in that case, we will direct here, or prepaid expenses. So all of this are the acquisition items. Prepaid expenses like insurance, or something like the rental, prepaid rental. So we recognize liabilities, we acquire the services, or either renting building or prepaid, let's say the internet. All of this is prepaid expenses that we consider it as services, or acquiring of assets or raw materials or goods. So either if it is cash transaction, if we buy on cash, so it will be this related to the cash direct. If it is with account payable, so we will start to record involve the account payable. So account payable will be credited by the amount of acquisition of goods and services. If on cash, then we will record here, sorry. We will record debt the cash, and also credit the credit the cash and cash or bank, and we will debt the raw materials purchase. Okay, so so when we do disbursement, so we will credit the cash in bank, and we will debt the account payable. Okay, so and this one for manufacturing expenses control accounts, and sales expenses control account, and also administration expenses control account. So if you notice here, now we are this is in case of the raw materials and production cycle, and which will affect the account payable for sure. And this one is more related to the cost accounting, So let's say the classes of transaction and account under the acquisition. So under the acquisition, we see the account that are related. First is inventory, property and plant and equipment, prepaid expenses, leasehold improvement, account payable, manufacturing expenses, sales and administration expenses. So if you see here, the inventory will be affected by the increasing the raw materials or the goods we receive. So inventory will increase. So, and property and plant and equipment and prepaid expenses and property and plant equipment, it will normally, especially for PPE, will be affected less compared to the inventory, which is more frequent to be affected. Okay, so those account, and in the time of cash disbursement, when we in the time we settle the cash, we pay to the suppliers. So the accounts related to this transaction is cash in bank from cash disbursement, account payable, and account payable is the when we settle, we need to reduce the account payable, and which we will put it in the we will debit the account payable and credit the cash in bank. And if we have discount purchase, the suppliers give us discount, so we need this account will be included. Okay, so again, business function in the cycle is acquisition of goods and services, process purchase order, receiving goods and services, recognizing the liabilities. See, in function 4 and 5, we start to record the transactions in the account journal and ledger. So we recognize the liabilities by recording the transaction under the account payable, and as well as in the purchasing material, raw materials, or the goods and other services and so on that we acquisite. Then 5, process the payment. So we process the recording of cash disbursement. Okay, so let's say now the related documents and reports. Related to processing the purchase order, we have purchase requisition and purchase order. Purchase requisition is internal form that within the company, normally the different department, different line of production, they need to fill up what they need in their department or their line of production, or sometimes the sales people, they will fill up to request some items to be in. And then they need to, the procurement department, they need to prepare the purchase order, and purchase order, it will be sent to the suppliers after approving. So we are expecting to have those 2 documents to be pre-numbered and to be and purchase order to be authorized by proper authorization, maybe the procurement head department or audited by someone else. Okay, so whereby when we receive the goods and services, we expect to have receiving report. So receiving report, normally after counting the goods and inspection of the goods according to the purchase order, so we prepare the warehouse will staff or team will prepare the receiving report. So receiving report should be also based on should be pre-numbered. Okay, so now we start to talk about recognizing the liabilities. In recognizing the liabilities, we have some documents, which is the first 3, 1, 2, 3 are document. Vendors invoice, we receive vendors invoice, they send the invoice, and we also will receive debit memo and prepare debit memo for the items that we will return to the suppliers or the vendors. And also the voucher. Voucher is the list of documents, the list of invoices that we supposed to pay, and normally those documents should be pre-numbered. Vendors invoice will be for sure it is external documents, so it is more reliable. Then based on those items and the account, the receiving report and purchase order, we will start to record the acquisition transaction file, update the acquisition transaction file, and then after we update the acquisition file, we can update the acquisition journal or listing, and then if it is on credit, we update the account payable master file, and end of the year we need to, or even end of the month, we need to update the account payable trail balance. And then monthly, normally we will receive vendors statement, or we will prepare vendor statement. Vendor statement. In the vendor statement, we will state the invoices that we purchase from this suppliers or vendor, and also we will state how much is the balance due we supposed to pay, and how much we settled if we did pay any cash. So it's kind of statement that declare the details about each vendors in terms of the invoices, purchase invoices from the specific vendors, and any payment. Then lastly the balances. Okay, so now let's say the last one, or the last process, is processing and recording the cash disbursement. In the processing the cash disbursement, we have the check. We prepare the check. We prepare cash disbursement transaction file. We update the cash disbursement transaction file based on the check that we prepare, and we then update the cash disbursement journal or listing. Okay, so as simple as that. So in here we have list of transactions or list of documents and record, and in the right side is the activities. So what I will do here, I will request from Ayman bin Khalid.
Yes, sir.
Yes, please, Ayman. Read the first line.
Purchase requisition.
Yes.
An authorized employee requests the purchasing department of purchase goods by an authorized employee.
Okay, so we in the purchase requisition, it's requested by authorized employee to purchase to request the purchasing department for purchase goods by authorized employee. So let's say the purchase order. Read, please. Continue, Ayman. Purchase order.
Purchase order requesting outside supplier to supply goods specified in the purchase order.
Okay, so the main difference between the two documents, as I said, one is internal document. Purchase requisition is internal documents from department to another, whereby purchase order is document prepared by the purchase department and sent to supplier, the outside party. Okay, so this is the main difference between the two the functions. But bear in mind, now with the IT involvement and most of those activities will be done by the system or software. So most of it will be if you click the purchase requisition, you need only approval by another click by another authorized person, and then it will direct goes to the suppliers or vendors. Okay, next, receiving report.
Receiving report. Preparing a report upon receipt of the goods showing the description, quantity received, and date received.
Okay. So in here, it's about this receiving report normally is held by the warehouse team when they receive the items from the suppliers. So they need to physically count the items, checking the quantity and the quality and description of the items received. Okay. Okay, then next, Debt note.
Debit note. Preparing a memo authorizing purchase return for damaged goods or goods received not in accordance with specifications.
So debit notes, we prepare it when we have purchase return for any reason of damaged goods or good received is not according to what we request. So we prepare debit notes and we to send to the suppliers, and also to amend the recording for the invoice, vendor invoice. Okay, so maybe thank you, Ayman. Maybe I ask Ahmed Muazzuddin Fitri.
Yes, sir.
Okay, can you continue? Vendor's invoice.
Vendor's invoice. Billing by the vendor giving a description of goods, amount due, and payment terms.
Okay, so we receive, this is what we receive from the suppliers. Okay, next.
Vendor statement. Prepared by vendor showing beginning balance, purchases, payments to the vendor, and ending balance.
Okay, so vendor statement is prepared by normally it's monthly statement sent by the vendors or the suppliers to the client company to show the first the beginning balance, if there is purchase, any purchases within this month, and any payment that the client has settled with the vendors, and then the ending balance. Voucher.
Voucher, summarizing details of purchase transaction which serve as the basis for recording and approval of payment.
Okay, so voucher normally we use it with in big companies with the frequent transactions from one vendors. So let's say instead of recording, because we have multi transactions or 100 transactions a day. So instead of having one record for each invoice or each transaction, we will use the technique of voucher. Voucher is kind of, we summarize the details of purchase transactions, which is, let's say, from one customer, one suppliers, and then we record it in one based on this voucher, and it should be pre-numbered, and also it should detail up the number of invoices, the breakdown within the voucher. Okay, next.
Voucher register, recording all vouchers in the register if purchases journal has not been used.
So in case if we use the journal, purchase journal, so no need to use voucher register. But if we direct to the ledger, so we need to use voucher register, which is listing down the invoices, and we have the balance on it, so that it will help to for the later on for the reviewing and documentation. Next.
Check register, recording all payments in this register if cash payment journal has not been used.
Yeah, same like voucher register. Then the last one.
Creditors ledger, posting all purchase and cash payment transaction to individual accounts in this account payable subsidiary ledger.
Yes, if we if we use journal, then we will take the balances from the journal to the ledger, subsidiary ledger. But if we use the register techniques method, then we will take the balances from the register, either registrar of voucher registrar and check registrar, to to the subsidiary ledger of account payable and also the cash. Okay, so until here we cover the activities, the account related to the acquisition or purchase cycle, and we also discuss the documents that in this cycle. So let's say the methodology for designing, control, and substantive test. So what the auditor now concerned is the first is to know those activities that we mentioned, knows the flow of transaction, knows also the documentations expected, and then we need to design the start to design the test of controls and substantive test of transaction and event and details of balance substantive test. So what we should do first, we should understand the internal control, acquisition, and cash disbursement. So first we need to have overall understanding of internal control related to the acquisition and cash disbursement. So now we know we have what we discussed just now is all about understanding the overall of internal control. So we know the documents, we know the flow of transactions. Just now we mentioned something about we need to have authorization here and there, especially in purchase order, and also we need authorization in cash disbursement. So those are controls should take place in the acquisition and cash disbursement transactions. So after that, we need to assess the control risk. Assess the control risk means we need to assess and check the reality or the practice of internal control related to the acquisition and cash disbursement. So we check how risky is this accounts, whether they have, we check the deficiencies of acquisition and disbursement transactions. So if the result of this is okay and we don't need to extend the internal control, so we will go direct to design the test of controls and substantive test. If not, we may extend we may determine here the extent of testing of control. If not, then we will go direct to design test of controls and substantive test of transaction for acquisition and cash disbursement to meet the transaction related audit objective. So remember, same what we mentioned in previous chapters, that when we design test of control and substantive test, we need to design the 4 items. One is audit procedures. We need to design the type of audit procedures, and we need to design and plan the sample size. We need also to design and determine the items to select in our test and the timing when to do that test. So 4 component or dimensions should be taken care in designing the test of control and substantive test. And this one is not only in this cycle. It is you will see it later on when we discuss other accounting cycles and transactions. Even we have discussed it in the previous topic about the revenue cycle. Okay, now let's move to the first one, understanding the internal control structure. We need to understand the purchase cycle activities, payment cycle activities, and we need to understand the internal control structure of the control objectives and control procedures. And this one we have discussed it in details just now, understanding the flow of the documents, understanding the flow of transaction, understanding the authorization position, understanding the control of documents and the review and so on. So how to collect this information, how to have this understanding for the internal control structure? We need to have to study the client flow chart of the transaction of acquisition and payment. We may send a questionnaire to get information or acquiring information from the management or employee. Also, we can run a walkthrough test. Okay, so this one also will be assessed through the auditor previous knowledge, interview with client personnel, inspection of documents and record, evaluating the vulnerability of accounts to errors, review of policies and procedures, observation from activity of the firm activities and operation. So we start from this side. Actually, we start from based on our auditor's previous knowledge. Then we do interview, inspection of the documents, and then we can move to the the flowchart questionnaire and walkthrough. This one will drive to better or to draw the understanding of the internal control for the acquisition and payment cycle. Okay, so next is assess the control risk. In assessing the control risk, we need to, as an auditor, to have to focus in 4 items. Mainly is the authorization of purchase. So we need to check the existing of authorization of purchase, and we need also to ensure that the effectiveness of authorization of purchase process. And then next is to ensure the separation of assets custody from other functions. The separation of assets custody in terms of the warehouse or the property and plant and equipment, whether it is separately the one who custody or taking care of these assets or raw materials and so on in the inventory, from those who are recording or from those who are purchasing and preparing the purchase order. Number 3, we need also to ensure the timely recording and the independent review of transaction. So we need to ensure the timely of the, and then we ensure the existing of independent review of transaction. Last one is about payment. So we need also to have authorization of payment. Okay, so determining the extent of test of controls, we have 2 points here. One is to auditor identifies the key internal controls and weaknesses to assess the control risk. Number 2 is to that the auditor performs test of controls, obtaining evidence that controls are operating effectively. So number 1 is to ensure the existing of the internal control and whether it is existed, and we check the weaknesses. Number 2 is to ensure to obtain evidence about the effectiveness of the operation of these controls. So now let's move to test of controls for the acquisition, purchase, and payment cycle. So now we are designing what we, because just now we mentioned only how to reach to the final design of test of control and substantive test of transaction. So let's say first the test of controls. So in order to understand the test of control, we need to understand first the management assertions, related management assertions about controls and substantive test of transaction for the acquisition. Number 1 is occurrence, completeness, accuracy, posting and summarizing, classification, and timing or cutoff. Occurrence or existing, that the recorded acquisition are for goods and services received. So we are not recording something is not existed in reality. So also the completeness, the existing acquisition are recorded. So whatever we receive, we should record it. Whereby the occurrence is whatever is recorded, it should be for something we receive already. Okay, so occurrence is the acquisition are correctly recorded based on the receiving report and invoice document. Posting and summarizing, acquisition are correctly included in the master file, so it's included in the right master file, and it is accurate in terms of classification. Classification, acquisition are correctly classified. And lastly, the cutoff or the timing, acquisition are recorded on the correct, in the correct date or the accounting period. Okay, so let's say now the occurrence, as we say just now, recorded acquisition are for goods and services received. So number one, all acquisition are authorized. All acquisition should be reviewed by independent employee. All vouchers prepared by for payment should have supporting document. All documents should be cancelled upon payment. So when we pay, we should cancel that invoice in order to avoid the double payment to the vendors. Lastly, record acquisition are for goods and services received. What auditor should do? So this is what should be have. What the company should have in terms of internal control is this 5 items. So what the auditor should do related to the test of control is number one, examine approval signature. So we examine the approval signature in terms of existing and effectiveness. Number two is inspect evidence independence review, whether they have independence review. Number three is matching documents. We match the documents which we said just now is the receiving documents, the invoice, receiving report and invoice, purchase order, and so on. So we need to match those documents. Then we also check the cancellation of documents. Supposedly they have either stamping over those invoice which has been paid, so they should have that stamp. So we check how they ensure that they cancel the payment, they cancel the document that or the invoice that has been settled by the company. Okay, so how about the auditors audit procedures related to the substantive test of transaction? So in terms of the accuracy and other functions. So number one or the procedure number one, auditor should do vouching from selecting transaction from the cash payment journal to the supporting document. So we do vouching from the recording of the cash payment journal to the supporting document. Also, auditor can or auditor should gathers evidence concerning the reasonableness of authenticity of the record purchase. So we checking the authenticity in terms of authorization and in terms of the reliability of the documents. So this is an illustration of the vouching. So we have here the purchase journal. So we will vouch to the supporting document, which is purchase order, receiving report, and vendor invoice. Okay, so we need to check selected sample in purchase transaction whether they have supporting documents, vendor invoice, receiving report, and purchase order. After that, we move to completeness, which related to existing acquisition are recorded. We have two points here. One is about properly record, so it should be we need to ensure as an auditor, our objective here is to ensure that it's properly recorded. So how to do that? We supposedly they have all documents should be pre-numbered. Purchase order and receiving report account should be purchase order and receiving report should be sent to the account department for the proper documents as a supporting document for them, and review the client accounting, numerical sequence, purchase order, receiving report, and voucher. So they should do the review of the client account based on the numerical sequence of purchase order, receiving report, and vouchers. And then lastly, testing sample for numerical sequence. Normally, the risk related to the transaction of acquisition is reducing the underestimation of acquisition, which will they try to reduce their liability. Okay. Any question up to now?
No, sir.
So this, okay. So let me continue, then we will open the for question later on. So what auditors should do, also related to the to achieve the audit objective related to the completeness, is first to vouch sample for receiving report with correspondence document, examine report prepared by client. The debit memo should be traced to creditors ledger. So it will be this flow starting from receiving report to the voucher register to the cash payment journal. So if you notice, this one is kind of register, kind of recording, and this one is the supporting document. That's why we call it tracing. But vouching is the opposite from the recording to the supporting document. So now here we will check the accuracy, cutoff, and classifications. So it should be about the recording function, about existing of independent review on receiving and invoicing cutoff procedures, and journal entries is supported by related documents. Chart of account should be used. Chart of account, it will help for the classification, more to the classification, whereby independent review is accuracy, record function accuracy, and this one is accuracy as well. So what auditors should do? Auditors should examine the evidence of internal check and review. Also can observe, perform observation and inquiring of information from the client. Also can voucher check the voucher register should be tested for arithmetical accuracy, which is here the calculation or computing, and then examine sample voucher for classification. Examine the sample vouchers for classification. We ensure that the voucher, if it is voucher for for a check voucher or payment voucher should be classified for the payment or for the account payable. Then vouching to supporting document in general, we vouch some record to the supporting transaction, supporting document, sorry. So also auditor should review the related record shortly before and after the year end. Reason, because as I said, there will be more, it's expected to have more sales return or delay payment to the subsequent year in order to ensure the balance of the cash is high or overestimated. Note the number of the last report and trace them to the appropriate record. And when we say last report, means the last report of receiving goods. Okay. Last one is examining the files of unmatched report and processed vendors invoice after the year end. So this one will serve the same objective here. Also, auditor can also examine the supporting documents for consistency as to depreciation, quantities, price, amount, vendor terms, dates, and account codes. So we check all of these details. And then perform recalculation on suppliers' invoice to verify arithmetical accuracy. Last point is scan the purchase journal for ledger and unusual items. So we check normally the unusual items in terms of whether there is unusual transaction within the record, in terms of the amount, in terms of the type of transaction, type of items we are selling, we are buying. Let's say I give you an example of unusual items. The company is dealing with food. Okay, so they buy ingredients, then let's say they cook it and they sell the cookies or something. And unusual items is to have one of the list of purchase requisition or invoice of iPhone. So iPhone is the iPhone purchase transaction is unusual transaction. It should be questioned, and auditors should ask the management about it, why it is here and how it's related to the company. Test of now we move to test of cash payment transaction. After we do the test of acquisition or purchase. Now we move to test of cash payment transaction. Same thing, occurrence. We need to check the occurrence, the control test, activities related to the occurrence. Use pre-numbered of check. It's expected to have this. Mail out check immediately after the payment. Restrict the check signature signing authority. So maybe better to have more than one signature in the check. So from two different departments, maybe that the CEO and the financial manager, or even sometimes three. So the manager and the financial manager and the internal auditors, if there is. So auditors should inquire of information and also should inspect of the documents. So when we say inspecting of documents here related to the cash, so it will be the documents of invoice, vendor invoice, the recording of registrar voucher of payment or cash, and also the the payment voucher, and also the check copy. Completeness. So we need to check completeness check should be pre-numbered. Bank reconciliation, and normally the bank, and now the checks is pre-numbered. Bank reconciliation should be prepared by independent employee. So the one who do the bank reconciliation with the bank statement should be independent employee. So it means shouldn't be the person who is having related interest, like he is also working in the department of sales. Okay, so auditors auditors should examine the client documents, test, check numerical sequence of check in the check register cash payment journal, and lastly is tracing. And here tracing from the record to the tracing from the documents to the let's say tracing the checks to the recording of the payment account payable and the check. So lastly is about last point here is the cash accuracy, cutoff, and classification related to the cash. Number one, expected to have compare the check with the vouchers of the agreement on P, amount, and dates. Use the chart of account to classification transaction, and expected to have recording cash payment is mentioned by supervisors. What auditor should do to ensure this is to first is to examine the cancellation, the cancelled check by the bank, test check arithmetically accuracy of the check with general ledger posting, review account code on sample of vouchers. Okay, so now to this point we finished the test of test of control, design, and test of substantive test of transaction and events. Let's us move to the methodology for designing test of balance for account payable. So test of balance of details of account payable. So we have the same sequence, 4 phases. Number one is identify client business risk affecting account payable. So understanding, set up the tolerable misstatement, number 2. Number 3 is assessing control risk of the acquisition and payment cycle. So all of these 3 is phase 1, which is will direct to design and perform test of control and substantive tests of transaction for the acquisition and payment cycle. These 2 are being explained earlier in the previous slide here. Let me show you, and I'd like you to see the sequence to understand the sequence here. So this one is what we this one will be phase 1 and phase 2. And if you want to have this overview understanding, you need to understand chapter 13, which I have explained in last time. So now we move, after we finish this designing and performing the test of controls and substantive test of transaction, we move to phase 3 related to designing and performing analytical procedures for account payable balance. After that, we move to designing test of details of account payable balance to satisfy balance related audit objectives. And in this designing of test of details of account payable, we need also to have those 4 items: audit procedures type, sample size, item to select, and timing to perform the substantive test of balance. Okay, what is the analytical procedures we should have in place? Or first we need to compare the acquisition related expenses account balance with the previous year. So this one, what is the possible misstatement is misstatement of account payable and expenses. Account payable and expenses, so they may it may not properly recorded, so or that it may carry some wrong record. Review number 2, review list of account payable for unusual non-vendors and interest bearing payable. The possible misstatement is wrong classifications of non-trade liabilities. Number 3 is compare the individual account payable with the previous years. The misstatement likely is unrecorded or unexisting account or misstatement. Then number 4 is calculating ratios such as purchase individual by account payable and account payable dividend by current liabilities. Possible misstatement is unrecorded or unexisted account as mentioned earlier. So now we move to the designing and performing test of details of balance for account balance, including the out of period liabilities test. Out of period liabilities test is to check whether whether there is some shifting some liabilities from the current year to the subsequent or the next year. Okay, so what to do? What we should do here, we should first examine the underlying documentations for the subsequent cash disbursement. Number 2, examine the underlying documentations for bills not paid several weeks after the year end. Number 3 is tracing receiving report issued before year end to related vendors invoice. Number 4 is tracing vendor statement that show balance due to the account payable trail balance. Lastly is sending confirmation to vendors with which the client does the business. So those 5 audit procedures are related to the test of out of period liabilities. Please remember it, because normally when we discuss the cases, you should have this kind of answers. Reliabilities of evidence. So we need to have ensure the reliabilities of evidence. We need to understand the difference between the documents that in this cycle. We have vendor's invoice, we have also vendor's statement, and we have vendor's confirmation. Okay, so vendor's invoice and vendor's statement is kind of 2 documents come from the vendors. The vendors send the invoice for specific transaction, whereby vendor statement, as we said, it carries some list of acquisition or list of buying, purchasing transaction, and also having the payment has been done through the month or through the period, and then it carry the balance, ending balance. So this is the difference between the 2. So normally vendor's invoice is the document where we should rely on to be based off the recording of the liability and recognizing the liability in the account payable, whereby vendor statement is kind of verification and also it assesses the cash payment of the process and transaction. Vendor's confirmation is also upon request from the auditors through the client to send to the vendors requesting the vendors to confirm the liabilities of the client about the balance. So normally the vendor statement will be reconciled with the vendor statement, vendor's confirmation, whereby vendor statement will be reconciled and also recheck traced to the vendor's invoice. So this is an example of vendor invoice. Simple vendor invoice carries some description about the items we buy, the name of the vendors, also the billing number and the date and the amount. Okay, whereby the vendor statement is carrying, if you notice here, it carrying bills payment, bills payment, balance forward, and so on. So end of the year we will have the balance of the vendor. Okay, so that's the difference, whereby the confirmation, if you, maybe I ask one of the students to read, to help me reading this. So I ask maybe Ahmed Fathur Rahman.
Yes, sir.
Please read the confirmation. Dear
sir or madam, will you please send directly to our auditors, Propis and Co, chartered accountants, an itemized statement of the amount owed to you by as at 30 June 2011. In addition to the statement, will you please include the following information: amount of purchase commitments, RM, amount past due, Ringgit Malaysia, description of any collateral held, enclose its business reply envelope addressed to our auditors. A prompt reply will be greatly appreciated.
Okay.
Okay.
Okay. This one is positive or negative confirmation. If someone can answer and give the justification, I will give 1 bonus mark.
Positive.
Why?
Because will you please send directly?
Both will be sent directly to the auditors.
Their sentence.
What is the difference between positive and negative?
At the end of the letters, a prompt reply will be greatly appreciated.
In the negative, they are if they request only if they disagree with the amount, then you send to the send back. But if the vendors or the customers are required to send either agree or disagree or like this to state the amount, so in this case it's positive statement, positive confirmation. But if let's say the negative will be like this, can you please according to our account, your amount, our balance is, let's say, 53,000. If you agree, if your balance is agree, it's okay, no need to reply. If disagree, please conduct the, you can state the difference and send to the auditor. So it's optional for the vendors to send. Only if it is disagree, but here in this case, they mention you should state it, the balance, and you should reply this confirmation. You should reply. Okay, so it's positive. Okay, so now let's say the type of audit test for the acquisition and payment. So if you, I think we did mention this in the chapter 13, that in the transaction level, this is the transaction level, we will have the test of control, test of substantive, test of transaction, and analytical procedures, whereby after the end of balances, when we have the balances, then we will have the analytical procedures, and also we will have a test of details of balance. Okay, and the same thing happen when we do the payment. So let's say how e-commerce affect the acquisitions and payment cycle. So now, I believe last semester you did ICE, isn't it? Accounting Information System. Did you?
No. No.
No, sir.
No, belum. Okay.
No.
Next time.
Okay. Okay. So what we have in practice, something says more electronical data in interchange called EDI. This EDI, they try to minimize the process, reduce the jam of transactions and the routine, try to reduce the documentations between P2P, between the business and business transaction. So by creating software that can handle the exchange or the interchange data between the related parties. So this is the example with order processing without EDI. So we have first the buyer prepare the purchase order, and then buyer send the purchase order to the suppliers, and then the suppliers will receive the receiving orders, and then suppliers will start to process the invoice prepare the invoice into the system, and then will create invoice for the customer, isn't it? And then invoice will be sent to the customer. Sorry, no need for this. So this is what is supposed to be without the EDI or without the software. But with the software, it will be only purchase order will be sent through the software EDI, and then by the customer, and suppliers will just key in and send the invoice. Okay, so you see how it will reduce the several flow of the transaction, either the supply or the invoice. So with this, we will have auditor should have knowledge and also have expertise on how to audit the EDI system, the P2P system. Okay. So let's say the last point for today is completing the test of acquisition and payment cycle, verification of selected accounts. Actually, this this account or this cycle is also related to chapter 19 or chapter 20, which is related to the PPE, the property plant equipment. When we do acquisition for it, the depreciation and so on. So just to have understand to what is the related cycles or account related to it is the in assets. Under assets we have cash, inventory, suppliers, property, plant and equipment has been mentioned earlier, patents, trademarks and copyrights in terms of if we are doing industrial job, manufacturing, prepaid rent, prepaid tax, prepaid insurance. Under expenses, we have cost of goods sold, rental expenses, property tax, income tax expenses, insurance expenses, professional fees, retirement benefit for the staff, and utilities. Under liabilities, we have account payable, rental payable, accrued professional fees, accrued property tax, other accrued expenses, income tax payable. So this slide is explaining the same what we have explained earlier. So I will not go through this. We will repeat the same thing, inshallah, in the chapter 20 for when we do auditing for property for the property, plant and equipment, PPA. We will discuss this in details just to show you the link. So that's all for today. Subhanakallahumma bihamdik, nastaghfiruka Allahumma wa natubu ilayk. Let me know if you have any question, please.